Hello, good afternoon, guys. Hope you can hear me loud and clear. Just let me know, and then I'll start my babbling. Let's see who's on today. Ali, how are you? Sounds all right. All right, let's get going. Welcome to Trade Setup and the live stream. It is the 23rd of July. Hope you all had a good weekend. We just had a bit of relaxing time. Looks like the market's down today, which I didn't quite expect it to get hammered on the open like that. We'll have a bit of a chat about that. I want to talk about a couple of things. Also, I want to show. We want to talk about bonds a bit today, and just it's only because I was listening to a podcast on the weekend, and I've listened to it a couple of times now. I found it quite interesting, and I'll give you the link to that. The guy, he was in his day was one of the biggest pit traders on the SFE, the Sydney Futures Exchange. So, g'day Frank, how are you? I'll send that link through so you can have a bit of a look too. And it's quite interesting. It's called Chat with Traders. He does some really interesting podcasts and chats with some big traders. So it's worthwhile just going through and picking out some just to listen to because oh look, it's just handy. It's very interesting stuff. Now, anyone that's new to Trade Setup, welcome. Firstly, and you'll see on the screen you've got our general advice warning. We only give general advice. We're not giving specific. So wary of that. Have a bit of a read through that when you get a chance. Top left-hand corner, you can join us on Twitter. Um, top right, you can join us on Facebook, but there's not much in there that's not on Twitter. And the bottom right, just subscribe to us on our YouTube channel and you get an alert anytime we go live on anything we do. That'll be from YouTube anyways, just in case you don't have the app or it's down or whatever reason, but you'll get the double up there. Now let's get into the market. Let me minimize that. Yeah, down 52 at the moment. It's down 58 not long ago. Now we know that in US wasn't a big night. It was down slightly, but really not much to worry about too much in the US. I think the Dow was down, was only down a few points, with 6 points or so. The S&P was down not much as well, 0.02 or 3%. So really not much. And it was, again, we had Trump jumping on Twitter. It's like he jumps on Twitter and then one of his offsiders comes and apologizes. So he doesn't really mean what he says there. So he's talking about the US dollar. And there was an interesting article, I think you can probably look at it somewhere it was on Reuters. I was reading this morning. Not the article as such, but it had a post and it had the US dollar and when he's come out and said different things, and he's always talked it up. I mean, at the moment, his latest thing is it's too strong, blah blah blah. He's just talking it up, but on the actual chart, it's had when he was saying it's too strong, and not long after that, oh, it's too weak, and then it's no, I'm happy where it is. Now it's too strong, so he's talking about China manipulating their currency, but God, he's pretty clearly what he's trying to do as well. So that was interesting. That spooked the US dollar. The US dollar sold off. You had the currencies, you got the euro, the pound, and the Aussie all headed higher, which is good. So that market currencies was just all sort of US dollar based as well at the moment. And he was also talking about potentially um, tariffs up to 500 billion. So on everything that the US imports from China, tariffs on the whole lot. I think at the moment he's talking that, well, his recent, well, their recent idea was 10% on, I think, 200 billion, 10% tariffs on 200 billion. And that's meant to be coming out, I don't know, about 3 weeks or so. They're meant to be the decision or the deadline on those tariffs is due. But now he's talking up tariffs on the whole lot. So he's obviously probably got out of the wrong side of the bed, jumped on the Twitter, expressed his views. The market's taken it, but it didn't take it too badly. It looks like we have obviously down 54, and that's probably because our market tends to do that quite a bit. You know, they're overreacting. Again, we are linked a lot heavily to China as well. So, and their demand for our minerals and things like that. So we're quite a big exporter to them. So what happens over there and with the tariffs is obviously going to affect what will affect Australia over here. So you can see the banks are down today, which is they're all down across the board. Dragon index lower, and probably not too much from commodity indices. Although the commodities themselves weren't too bad. I think gold bounced, copper bounced as well on Friday night. So it's sort of interesting for us to be down here at down 54. Let's take a look at the XJA now. Let me just make that a bit thicker. Yeah, big sell-off today. So we've pretty much taken out the lows from the previous couple of days. So we had a good day Friday, which is quite interesting, popping up right out of the gate. We'll look at an intraday chart. Find these intraday charts a bit clearer. So you can see that was Friday. We bounced straight out of the chart, pushed straight up. We had a couple of good days. So it was Wednesday, popped up on the open, then sold off sort of down, back down to the into the close. Gained some ground the next day, and then Friday we bounced straight up on the open and really pressed up towards the previous highs around that 63 mark. Fell a bit short, and then we sort of just ground our way, holding a higher low and lower highs into the close. And then today we pretty much shot straight down, took out the previous day's lows. So that was an interesting that we just hammered down there. I don't know what I think. Like I said, it's more fear than anything else on the open, straight down. I don't see any other particularly strong reason for it. Obviously, there's going to be some banter back and forth between China and the US, or Trump and China, um, banging straight back. Now, China is going to be a bit more. Oh, thank you very much for reminding me that. That should help. How much did I miss? All right, so that. All right, there you go. That should be better. Sorry about that, guys. I forgot that, didn't I? So you had the big sell-off today. It's holding around this level. What are we, 62.30? Holding around that level at the moment, but we'll go back to the daily. It's still the level for me is at 62, but it's not a major level at all. It's sort of the key level for this recent leg up from basically June last year. Oh, sorry, June this year. We're talking about June this year. That was your big push higher when it broke up and touched on that 61.50, pulled back, built a higher low, pressed up through that 61.50 highs, and we pulled back, built another little high low in here. We're still holding above that, which is somewhere around 61.75 and 62. So you've got that zone of support between 61.75 and 62 that if we can hold up above there, the trend is still up. Doesn't matter what's happened today. Even though we've had a big down day today, we could easily just pop back up tomorrow, the next couple of days, and take out the 63 on the upside. And the market, you can see if you can really drill down on the last, well, it's not really going to give us much, is it? But these few days, you've had a couple of days down, a couple of days up, a couple of days down, touched on 62, good couple of solid days up, touching just below 63, and that took out this previous, it's only a minor level, previous lower high. What was that at? 62.87. So we could just chop around here. What I'd be interested to see if this is going to produce some sort of higher low on the other side. So we're starting to curve back up again, hold a higher low. Probably going to get a bit choppy still for a couple of days. And of course, we don't know what Trump's going to say. You never know what he's going to say, and he could come out and the US could get caned, and then bang, we go straight through 62. But the charts themselves in the US are not too bad either. We'll have a look at those. Actually, we'll have a look at those now. So I'm really just expecting, as long as it holds up about 62, this trend is still up. Nothing's really broken. The key level really on the weekly is a long way off. We're still looking down below 58, 57.50. That's your key high low. We've got an inside level at 6,000. So we're still quite a bit off that. We could easily break this on the downside on the daily, and that's just this. It's really just this leg up from here that we're correcting. We're not correcting the whole lot, and just have some sort of take a bit of heat out of that market on the weekly. We might just take out those lows, chop around a bit, build a high low on the weekly again, and then up she goes. But I still think that weekly trend's looking solid. US, let's just take a look at what's happening over there. We'll go to the dailies. That's your S&P. You can see that's still heading up. We're just pushed up through 2,800. The market's a little extended, so we may see that the heat comes out of the market a bit, but I don't know if it's going to roll over like this. This is quite a deeper correction as we headed up into a key level of just below that 28 zone or 27.90 thereabouts. This previous little high here as well. You call that a zone. I mean, this is not really a clear break. It's more of a retest and just a bit of a washout of that previous high. big pullback, and then we've edged our way up. We got to here, fell short, so we're going to have a deep correction down to 27, and that's led us to push up through 28. So whether we just keep chopping around here and keep edging higher up towards the highs around that 28.75 zone, we'll have to wait and see. It is, it's taken a bit of energy to get from these lows at 28 to push through, lows at 27 to push through that 28 resistance zone. It's taken a bit of effort. So you've got to expect the buyers have done what they can do, and you're probably going to have to get a few of them put back on the sidelines, a bit of that supply put back on the sidelines, ready to go again, and see if we can hold another high low. But how far we correct is, anyone's guess really. The Dow, similar. That's more sideways actions to me, and probably because it's more the top 30 stocks on the Dow, and a lot of them got exposure to these tariff argy-bargy, so it's struggling to get up to the previous high. And this level, this pullback here, like we just saw on the S&P, the same pullback took out the previous high low. So that's chopped a lot of people out of this trend up, this push up here from the lows around 23.5. You can see these lows through here. It was building, okay, took them out, and we retraced that. So it's whether or not we can take out this high here. Was it somewhere around 25,300, 3 to 350, or 400? So I just saw the highs there around that zone there. Say 25, 400, 300 to 400. If we can get up through there, we might see that it backs and fills a bit, and then we'd be looking for that higher low on the Dow and see if they can take us up through into new highs. Otherwise, we'll just keep an eye on that Dow, though. It's still that, it's that offset between tariffs and a good economy in the US. So obviously, when it's going along strongly, and Trump doesn't like, obviously, doesn't like higher interest rates either, doesn't like the rate rises, yet, they're a good thing. It means the economy is going along nicely. It means he's probably doing his job anyway. He's making that economy grow. Um, the problem is if the tariffs kick off, everyone's got that in the back. No one wants to chuck too much risk into the market, because if tariff really kick off and he starts tariff and there's a big trade war, that's going to be a drag in the future. And people are always looking to the future when you trade your shares. What sort of future growth you got? And if that's going to be constrained, you're not going to want to chuck too much risk in this. So that's why this market in the US has been a bit iffy. It can kick on a bit, but then it gives it up pretty quickly, and it pulls back, pretty quickly anyway. And of course, that flow on effect, whether we hold up, or we might get it choppy where we are at the moment on the XJO, choppy above 62. I'm happy with that as long as we hold above 62. Even if we have a sort of this minor correction, we may pull back and retest these highs. Around that 61.50, we might pull back there and then resume that weekly trend up. Either way, it's going to take some time to play out. Now that's really just the overall markets. I want to touch on today, which I don't know if any of you know, some bigger traders around in Australia. I was listening to a podcast, and there's a guy called Rambo. Now, a bit of history on him. I'd be interesting. I know I was talking to, was it Laurent earlier on today, and we had a good old chat about it. And I mentioned it, and he was interested in listening to this podcast, so I thought I'd pop it up. Actually, I'll pop it up now. It's always interesting to see what guys have been doing in the past, but what he did bring up for me anyway, this is the podcast, Chat with Traders. There's a lot of good stuff on there, and you can go through and just listen. I listen to quite a few that I know. There's some, I wouldn't say dodgy guys in there, but there's some that I've got a few questions about. But there's some, obviously, a lot of traders in there you probably know, a lot that you wouldn't. But it's always interesting just to listen to their journey, listen to what they're talking about. But this is one guy, probably the only one really. There's probably a few in there. Maybe there's a few in there from Australia. You probably find there was a few traders from earlier on in this in Chat with Traders from Australia. I know at one stage I think he was wanting Davin on there to have a chat. So I'm trying to push on to see if Dav can get on there and do a talk. If you're listening, Dav, if you're interested still. With this guy here, John Rambo, he was on. Anyone knows the history or the SFE? He had the pits, obviously. He was a massive trader on the bonds in the pits and the bills, the Australian bills. So you've got in Australia, for anyone that doesn't know, you've got the bills, which is your interest rate linked bank bills. I think it's 30, 60, and 90-day bank bills. and then they go out to the government bonds, which are 3-year government bonds and the 10-year government bonds. Now, he brought up an interesting point, and it just reminded me you've got to, for people who don't or do, if you're interested in the bonds, um, Nick Raj, yeah, I think he might have spoke on here. I've got a feeling if you go through that link, you'll see the link on the stream there. Go through that, and if anyone doesn't get it, just send me an email to support@tradesetup.com.au. I'll shoot it off to you. If you can't get it from the stream, but you should be able to see it in there. Yeah, Nick Raj, I'm pretty sure he was in there doing a podcast as well. And where was I? Not hard for me to get lost. Yeah, so the bonds. He brought up a good point. Oh, well, not really. He brought up a good point. It just made me think again about looking at bonds. And we always know that I know a few people that are traditional sort of traders. I guess you don't really take much notice of what's happening in the US. I think it's important. I've always done that in the past from a futures background because you're trading indices, not and currencies. So you've got to know what's happening on a global scale and what the global macro view is. Just to give you an edge, obviously, when you're trading, you don't want to get caught offside. I mean, you can look at purely at charts, but if you've got a bit of a heads up of what the bias could be, for example, at the moment with the US dollar, it's important to get it's important to know really for an overview. Even if you're trading Aussie stocks, most of the time it doesn't mean too much, but a lot of the time it does as well. I mean, so when you really don't want to get caught in an outlier like a GFC or there was an Asian crisis before that, European crisis, all these sorts of things. You don't want to get caught in that. So if you do have a bit of a view on the overall picture or the global macro picture, then it's going to always help you out. It can't ever hurt your trading. It can only ever help you out. And I think what he was looking at is Rambo was bonds because he was massive in the bonds. He was probably the biggest, or he's the biggest, I think, individual trader on the bonds, and he'd be trading up against banks. He was just massive. And his stories, he's got some really good stories too. It's worth listening to just for the stories and the fun of it. But he mentioned about the GFC, and he said prior to the GFC, and if you don't know the bond markets, you know that they're well connected. Obviously, they're trading government bonds and they're trading bank bonds, so there's not much bigger than that. And people talk to people, they would know, and they would react quicker than say your stock market. And they did. He said he was trading the spread between the government, the bank bills, and the government 3-year bond. And he said the spread would go out, you'd sell it, it'd come in, he'd make money, maybe go in a bit more. So he'd be trading that spread. He said one day it just kept blowing out. It was blowing out and blowing out. So he got out of hand. And he said he rang up one of his mates at Macquarie, who does obviously trades a lot of the banks, the bills and the bonds. And he was saying something about, okay, what are you trading? Look at what you're trading. He said, I'm trading the bank bills. Exactly, it's a bank. And you're trading that against the government one. And he's going, oh yeah. So it sort of come to his attention that it was something wrong with the banks. And now this was 13 months prior to the GFC, where it come out to um, pretty much the general public when the market started getting smashed and stocks started getting smashed. So what it's saying is really the bond market typically traditionally moves a bit faster and will react a bit faster to the overall picture. So it's worth, after my rant just there, and then what I'm going to try to do is just keep an eye on the bonds more because it's only that outline. I mean, just to have a look at the bonds, see what they're doing, to see what they're moving. If there's any outlier moves that you think, oh, what's going on there? Something that's not commonplace from day to day, which might give you a heads up of what none of us want to get caught into, major market crash. And there's always talk from the bears of, major market crash. Be careful of this, be careful of that. Oh, it's starting now. I know particular people that have always been talking. They've been talking it up for years too, don't forget. But the thing is, they can talk it up for 5 years and then get it right, and they're a genius. Yet 5 years they've been wrong. So it's no skill in it if you're just going to talk it up. But there is a skill in trying to trade what you see, as in we're trading up at the moment. We're buying stocks, we're buying shares. Today's not a bad day for us, even though the market's pulled back. Trading what you see, but it's that outlier event you want to try to negate, and you always want to try to negate that. And if you could through the GFC, that was great. And if you didn't, because you were just so focused on individual stocks, because it was a bull run, don't forget. But anyone who was looking at bonds prior to that had a massive heads up that something wasn't quite right, especially in the banks, because the bank bills were getting hit hard, and not traditionally they were getting smashed. So if you're looking at that, what's going on with the banks, and you probably had a good 6 months to a year to try to figure it out. And if you could, you had a massive heads up that maybe that's going to flow on through to the stock market, and you don't know how bad it was going to get, or you only really know that in hindsight. But you still had a big heads up from just following different markets, following a global picture, maybe following the banks, just getting a bit of an understanding what's happening in bonds and things like that. So I'll probably stop it there, my rant there. But I think is anyone trade the bonds? Anyone watch the bonds? Anyone take note of what's happening? It doesn't have to be spreads, but just anything in general. A quant trader, all right. Also put in some codes. We'll look at some stocks. Chuck in anything you want. I'll give you my opinion, and you can believe me if you like. Yeah, it's really worthwhile listening to this guy too. Rambo's name. Remember when I was a broker, the old war stories about Rambo and the size he used to trade. And it's really interesting, not just the stories, but from his point of view about trading. Um, and CLV, we'll look at that. And just as a trader, no one likes to take a loss, but it's part and parcel of trading. And you have to everyone just realize that the way he talks about it's quite interesting. All right, let's rip into it. Then we'll get into CLV. Oh, for anyone that was watching, we were chatting about S32, South 32. Will do. That didn't work out. Don't ask me why that happens. Here we go. So South 32 is the premise for the trade. What we're looking at. This is why it's I don't want to bang on about too much, but it's really important to know where your stop level, where your risk levels are. Um, Otherwise, you can easily get caught. So our risk level, what we were looking for was this market. You can see the lower lows, lower highs pressing down. I was watching it to break out of this contraction lower. It was in a prime position. I think the weekly's down sort of that oversold. Problem is, it broke out of there this morning, so we've cancelled that alert. We're not looking at it anymore. We'll just keep an eye on because this particularly looks like it's going to head down to that support zone at 320, which for me, probably find this long-term rising uptrend maybe starting to find a few little issues. But this is a key level on the weekly, just below 320. That's your key anchor level to this up move. You've got a double 10, a double top you'd be fighting up against. But still, that daily was looking quite good. Chop chop. You wanted to see that pop up through 370, and then that contraction lower, or that pullback, or that correction lower. We wanted to come out the other side, and we wanted to see if we can get into a trade when it's rising on the way up, looking to attack $4 as it played out. Broke out through the downside through 350, so we're on the sidelines watching. Just be wary of that. Now, let me go over here. Let me get rid of that. So we want to look at, first up, CLV. What about there? That daily trend, look, daily trend is up. Would have been nicer, obviously, just at a glance. I mean, buying in here would have been nicer. Obviously, and they're shallow pullbacks. So shallow pullbacks when it goes sideways for a while, perfect. That's ideally what you want. The problem is what we had here. The market's worked off a lower high, and it's a deeper correction. So it's probably that first. It could be the first cracks appearing in more of a macro, and by macro I mean this weekly trend up hasn't corrected. This could be the first signs that potentially we're going to go into some sort of corrective phase on the weekly chart. And looking at that, that could mean a push through 130, deeper correction, and then start to build the base on your daily and start to hold some high lows and then go. But that could take anywhere from a month to 6 months or even longer. You don't know how long that's going to take. You'd rather be on the sidelines watching than trading. And that's your daily chart. You can see the daily chart from that pullback there. Let me just draw it. I can probably minimize that quite a bit actually. So we're just focusing on the last few days. What do they do? Clover Corporation. All right, so that's, you can say that's the uptrend that's broken here. Well, for me, we've got the highs up towards 180, and you can see this push down here. It was really a decent washout, and you would have expected potentially that to hold up here, start chopping around, maybe bring a high low, and then go again, have another leg up like we've had previously. Instead, it didn't. It broke down, built your little minor lower high at 170, broke down out of this uptrend. Doesn't mean this could be your correction or your corrective action on a weekly, and then we start to head higher. Problem is for me, we're starting to get up where we're nowhere near. Well, we're not nowhere near 180. We're falling short of that 180 high, the previous high. So if it's a strong market, it should have been up there. You would expect, and you can see this sort of, it's relatively choppy. You don't want to see that with a strong market. That doesn't show you strength. Strength is a couple of days in a row. A move like that, a move like that. Not so much choppy. That means every time it pops up, it runs out of steam. There's not enough buyers in there to continue that strong move higher. And then you get selling come in. Buyers start to pick up again, selling coming in, buyers start to pick up, and selling coming in. So it's not too strong, that type of price action. Couple that with going from overbought to oversold. So it's taken a lot of energy, a lot of pressure from the buyers to get it up well, you can only get it so high as 170. So it's falling short of the previous highs, which is, again, not signs of a strong market or strong buying price action. And then if you go back to the weekly, obviously the weekly's potentially getting a bit overcooked up here as well, and there's big rejection. So what I'm looking for more is either if we can hold up above 130, I'd expect it to chop around. I wouldn't buy it up here. Personally, I wouldn't buy it up here. I would rather see a pullback to say 130. We've had this choppy sort of price action up to here. That's 130. I'd like to see it come down, and then buyers hold it up above and start to build a major higher low, and then look to see if we can get some sort of entry and see if they can kick up and take out, the lower high and then take out 180. Otherwise, what we could do here could be that sort of move, pull back. You might get something like this instead, and then bang, we take out the low, we take out 130, and down we go. And we don't know how far we're going to go down from there. We could go all the way back to 80 cents from where that trend originated. Anyway, hope that makes sense. So that's CLV for me. I'll be just keeping that on the radar. It's more the weekly. I feel. I mean, this weekly could be due for a bit of a corrective action. Again, there's nothing to say this can't just keep going. But that odds are, like we said, it's probability based trading. You want the probability on the side where you can buy into it. I mean, something like that. That's a high probability setup. It's just starting to come out of a nice basing, a long period. It's still the unknown here. Up here is more than known. We know the market's trending up. Well, it has. Don't know what happened here. This could be on some bad news. Sentiment's potentially shifting here, and just see what happens. And just even if you're just going to jump in, you're going to manage your risk quite tight. I would expect. PLS. I actually don't mind. We've been watching this for a while. We got stopped into a trade here, stopped straight back out, which is a bummer, and then missed the actual move itself. So yeah, I've not much to say about this. This is quite clear, I guess. It's all about recent price action. For me to throw some more money at this and put on risk, it's really I just want to see a bit more price action happen here and some minor levels hold up and go, because we've had a good leg up here. We've had some sort of corrective action here, which has held up through 80 cents. It's probably clear on the weekly. Yep, so you can have leg up here, corrective action, start a new leg from 35 up here. We're correcting at the moment, so we don't know. I mean, you can never tell whether it's going to be something like this. We popped up and pull back, we retest 80 or take out 80 or wash out 80 and then start to build from there. Or is the market happy to go up from where we are now? If it's happy to go up from where we are now, I'm just waiting for that extra bit of signal so I can minimize my risk. Always about minimizing your risk and seeing your setup showing strength in buying rather than weakness. You want to see that strength in buying, and for me, that is, we'll just have this leg up here. We've pulled back essentially. I want to see that. That's that pullback. Maybe a bit of tightening up here, and then buy into a rising market when it's starting to accelerate. It's off higher lows. Higher lows mean strength. Buyers are starting to jump in. They're not waiting for a pullback. They're jumping in at higher levels. And then see if you can basically, to get that higher low means you're minimizing your risk as well. And see if you can start attacking through was about 112. And your next leg up is going to be up towards 125. Could easily be 2 or 3 to 1 by then. And then see if this is the start, because you've spent quite a bit of time essentially basing through here. And that's good. Spent a good couple of months, February, March, April, May, June, through here basting before we started lifting. And we're lifting off a higher low, don't forget, around that 85 mark. So that's taken in, starting to bring in the longer it base, the more you would expect more buyers it's pulling in, it's dragging in, it's perking more people's interest. Right, so that makes sense to me. I'm just looking for this type of price action essentially before we start to jump in and look for a push through 112, potentially right up through 125 and see if this weekly trend continue straight up through 125. Next, what do we got next? NOV. What is NOV? Oh. For me, this has got a bit of work to do, but longer term, it looks like, same sort of price action we've been chopping around here, held this level through 10, pushed up, pulled all the way back to retest 10. Maybe we washed out the lows, low of 9.41. Yeah, just touched through these lows before we rejected it. Held a higher low in here, another higher low, and that higher low, this recent one, we're on the weekly, don't forget, this recent one took us straight up through the previous high at 25.5, and then it was on. Pretty much from there, if you could pick up a nice entry on the daily, or maybe in here, that would have been ideal. You can see this, really the market was tightening up. It was still holding some very minor high lows and lower highs each day, probably more intraday than anything else. And then once it started pushing up through that high, okay, you didn't know that was going to happen. It was going to get a big green candle, but that's what we're looking for. We want to see pressure in buying, holding at higher levels. People are jumping in a bit earlier. They're not waiting for the pullback. They want to jump in at a slightly higher price. They just want to be in there. They don't want to wait. They want to be into the market because they're positive on it for whatever reason. Who cares why they're positive? We just want to see that type of price action. And then we want to know exactly where we're going to place our risk, which is below this level. So it pops up, gets us in at, say, 10 cents or 20 cents, 19 cents, just above this high. 19, say 20 cents we bought it at. If it gets us in there and then we get stopped out here, okay, something's wrong. It shouldn't happen. I mean, technically that shouldn't happen. So if you've been studying your setups and just taking note of what's going on there, or how they work and what you want to see or what you expect to see. If you don't see it, you get out. If you do see it, you get this type of thing. That's great. It started holding high lows, kept going up, right up to 50 cents before we started getting this lower high in here. And that was probably your first sign of weakness, potentially get stopped out, or I would have got stopped out below this low. 30, say, 30 cents from 20. What's that, 30% gain? Very handy. What the market's done since then is a big pullback at 20. Then you start getting this positive market again. It looks like sentiment shifted again. Shifted, then it's grinding lower. Took a couple of days to go from 20 cents to what, about 36? Only a few days, probably half a month. A few days, what am I talking about? 2 weeks, pop up here to get these highs, and then it's spent the next few months coming back down to retest 20. So potentially 20 is going to be a high low from that 10-cent level, which it found support at. Probably clearer, that's 10-cent mark through here. That's major support, popped up. We've corrected. Potentially, if this is the double bottom and it can hold, and the reason I say that is because of this last week candle, big positive green candle, that would be awesome. It's just the setup. For me, it's really the setup. And if you can, what I would be looking for, this is your corrective action across the highs. Yeah, we're just popping out now. So ideally, I'd like that. This is the pop out I'd like to see it. I want to trade it before that. I want to trade it really. It's popped out here, even though it's a couple of moves there. This can pop up. You get this minor pullback, pop up, and then we get somewhere we can place our risk off. Then, yeah, happy to jump in and start targeting up towards 50 cents if we can get back up there. And don't forget the weekly's probably got, whoop, come on, minimize. That weekly if that's the case and we get this little minor pullback, we're coming out of this contraction lower, you're starting to look towards 50 and potentially the second leg up. So this was your first leg up from say 10 to 50. We pulled all the way back to 20. It's a deep correction, yeah. That's okay though. And this leg could take us from somewhere around, the high low is 20, take us up through 50. You would only add about 10 cents, somewhere around 60 cents, say. So if you're getting in around 30 or thereabouts, it's 50% gain, 100% gain. Sorry, it's quite handy. Nothing to shy away from. So I like that. That's quite nice. I think it's just got some work to do first. IEL. All right, I saw this one on your chat before. I'm too scared to say what I think. Now, this one, you can see that's a well-established trend. What I don't like about it is that it's a well-established trend. You can see this move up essentially from the start of the year. Had a little pullback, big, strong candle, went sideways for a while, extended up. It's extended up to $11. That whole time it was grinding around. I mean, this is another reason you don't ever just shy away from something because it's in overbought territory, because they can just keep going like this. This was in overbought above 80%. Probably since the start of that pop up through 750, then it put on another $3, $3 to $4, $3, sorry, before we got this couple of good red candles on the weekly anyway. Now that to me is extended away on the weekly. So on the weekly, to me, I just look at that. Unless it goes sideways, if you get in, it goes sideways for a while and the MAs catch up, fine. But for me, this type of price action tends to lead to a pullback to the MAs on the weekly charts. Now, if you look at the daily, today is probably not the most positive sign. It was looking okay right up until today. Maybe you could have bought that through a break of 10.25 with your stop just below, say 9.75. You're not throwing too much at it, but today that's just leading me to believe this is just potentially the start of a second move back, just to take a bit of heat out of this last move up, this most latest move up. And you can see the way this. Actually, this is quite clear that stochastic's down at 10% from overbought to oversold on this pullback. Then it pretty much went from oversold right up to not to overbought, but that was quite a strength in buying. Look, it went nowhere. It went sideways. So for me, that if it can't go up, it's going sideways. What's going to happen if sellers start to jump back in? Anyone that potentially bought it up here, above $10, bought it up, didn't get out, has seen this market going sideways. Where would your natural inclination to hold your stop would be? Somewhere around 975 or so. So if that selling pressure starts to come in, it starts to hit that stop zone, you'd expect that just to pop down. And then it'll probably plan out quite nicely. You got that secondary move down the weekly, the first sort of half decent correction, and then I would be looking for that to pick up. But that's just the style I trade. Could be completely wrong. This thing could turn around and go bang straight up through 10.25, attack 11, and on she goes. Just continues on up. But for me, I would add a low probability to that weekly chart, to that daily, slightly different. But I probably still wouldn't even trade that from your daily if you through 10.25. That's just me though. So there you go. We'll see how we go. We'll keep the talk up in the chat there, Lauren. This one, flicking it back to the daily. Let's take it one step back. You see that big move up. This is a monthly, by the way, zero. I do like that. We've traded this before. I don't know where we traded it. We got a chunk of this move up, and then we left it even more on the table. Where did we get it? I'm just going through my stats, sorry. Oh, we didn't get a massive amount. Actually, I thought it was better than that. 29.26. We took about 4 to 5%, and then got stopped out in a pullback. 29.75. We got stopped out somewhere in here before we took off, so we left a lot on the table. Excuse me. But anyway, that happens. But that chart there, that weekly is looking quite good. I like that. And this is another, it's going sort of oscillating around that overbought mark, and it's putting on more gains. It continues to go. This weekly trend looks awesome. Again, it's pretty much the same for me. I would like a bit more of a pullback. And you can see it's happened here, it happened here. This was more sideways as the MA has caught up. This was a pullback to the MAs, that reversion to the mean on the weekly. Here, more sideways, then starting to lift again. Nothing wrong with that. It gets ahead of itself. MAs start to catch up. These, you can see the MAs are starting to spread. They're spreading wider, which is good. It's going up, but it's like a band, an elastic band, like a band, like an elastic band. You can only stretch it so far before it's got to come back in and take a bit of heat out of that move, or where it breaks. And when it breaks, it's capitulation, of course. But so that way, I would rather see that go sideways. So I think it's going to take a bit of time before I would bother to get in, or just deeper correction, maybe 42, bit of a pullback, take a bit of heat out of the market, um, and then jump in. In saying all that, this daily is looking like it's ready to set up. You can potentially trade it through 47. Great. Hold your stop under 45. You're not risking a lot. Um, and then see if it can take out this high at 47.81. Okay, you've got a trade on. So for the daily's looking like there's a trade on to me. It will definitely look like there's a trade on. It's pulled back to the mean. You've got a sideways price action. It's holding up quite strong. MAs are caught up. It's ready to go again. You'd want to see it go soon. Um, and then if you get in, you've got this sort of contraction lower. You've got a higher low to work off here, taking out this level at 47, that little minor high low, if you can see what I'm talking about. That's your high low at around 45, say 45. High low potentially in here. That's only confirmed when it breaks out, but when it confirms, you're in. And then you've got a confirmed high low. Away we go. But again, I just keep, the reason why I look at the weekly is to see if that does go, and I do buy it here, what can I expect from that trade? Looking at the weekly, I wouldn't say I can expect a lot. So it might be one of those ones you're in profit for a while, you either just get out or you get stopped out. If it does, if the weekly starts playing out and you get that secondary move lower on the weekly. But again, that was, it's a bit like the other one there. APO is looking a bit better on the weekly. So that weekly there, let's just analyze this. It's probably worthwhile. By the way, guys, I've been knowing this. Just because what I say doesn't mean it's right. Wrong is wrong. Probably right a bit more often, but you're still going to be wrong. And it's everyone's different trading styles. It's what you always got to realize. It's mine's could be different. It just does not work for other people, which is fine. Works for me. But what you can see, I've just marked up this one. You've had a leg up here, gap down. It's gap down, and then it's held. It's held a support zone around that, say 4 to 450 or 430. This zone in here, so it's touched down originally. You've touched down here a couple of times here and in here. So that's nice little support zone. Then we can see the price has lifted, pulled back high low, and popped up through this previous high. So to me, that weekly is saying it's on its way up. So you're really just drilling down to the daily, even though it's gapped up here. I mean, there could be that closing of the gap. It doesn't always happen. It could close the gap another year's time. It doesn't matter. This is looking fairly strong, stronger on the weekly than the other two charts. Well, for what I look at anyway, the other two charts on the weekly are strong, but they look like they're running out of steam, whereas this one looks like potentially maybe 1/3 of the way through a move up on the weekly. Does that make sense? So we've just started this move up on the weekly. We've a long basing period of probably about a year to took a lot of heat out of this market, of this previous move up. This through here, this pullback, taking a lot of heat out of this market, put a lot of people on the sidelines, accumulation through here, and then we're starting to pop up. Then you'll start getting to distribution when people are just slowly edging out on the way up. But it doesn't mean this can just keep going from here. You can see it's gapped up, held. It's going sideways. So it's a good sign of strength, unless this rolls over and pulls out this low, takes out this low at 622. Excuse me. Let me just have some of my coffee. Absolutely ice cold, by the way, that coffee. So that going sideways is not too bad. You can see the MAs are catching up. Sooner or later, that's probably going to perk the interest of some buyers. And if it can push up through 640, it could be worth. I'd just like to see it pop up. You can buy that on that sort of breakout. Keep your risk below, these lows, somewhere around 620, say. You're not throwing much at it, don't forget. and then seeing if that can continue that weekly trend high, take out this high at 670, and then you're pretty much going to be looking up towards, the whole number of 7 and then up towards 8. But that one doesn't look too bad. I get obviously iffy with gaps, gets a bit gappy, but obviously some positive news, and positive news followed by sideways price action, it puts more emphasis into that positive move, if that makes sense to everyone. But yeah, don't mind that. What else we got? JMS. Well, here's another one. What's actually happened here? Why is that? Obviously, you wouldn't bother with this data. Tightening up. Okay, so this, what was that date? Was that 2014? So it's come back on for whatever reason. 18th of April. Not much data to work because you don't even be really worried about this just most recent data. I hate it how it does that. Let me just come back. Anyway, it's a bit tougher because of my stochastics. It means I'm going to miss out half of this data before it's going to take this point as a low point in the chart. Oh, it might be a bit better. I don't like how it's stuck up the top of the chart there. Either way, it is tightening up there. You've had this big, I wouldn't say gap up, forget about that. It's opened up here. We've had a big bit of a pullback or corrective action down to lower 32.5. Pop up, retest those lows. It got to probably 33.5. Retest the lows, not really a double bottom, will give or take it is probably. Retest it, start to pick up again. And then it is a bit of a grind, but this recent pop up took out the previous high. I don't like that price action as much. And this is probably an example of where I would be more concerned of a washout of 40. It is tightening up, but it's tightening up into that 40 zone. And you can see the candles, there's still some selling. It means that someone's tentative. You're tentative about buying it up. People are buying it up. You can, at each day is a slightly higher low. Then we got up to right up towards that 40. Bit of a pullback on this red candle here. Bit of a pullback there, and we popped up into 40 again. But again, it was rejected. It's going sideways at the moment. I mean, it could easily just go through 40, take it the high, you bought it at 40.5 or 41, and then up she goes. Or it could just wash out that level and completely come back down again to retest these lows. You don't know what's going to happen. But just looking at the stochastics of late, we were up and overbought up there, went down to oversold on really not much of a move back down, and we're sort of heading back up towards overbought as well. And we still can't get through 40. It just seems to be like it's popping up, probably a little bit too much resistance for me. I would rather see the market, a good strong move up, a bit of a corrective action, and then you're looking for that secondary strong move up. Or you're just getting a continuation trade in a daily chart where the trend is well established. At the moment, this is more like it's come back on, selling off into the open, well, probably for the next few months, and starting to lift again. So it could be more of a news-based drive if it kicks on. But we'll keep an eye on it anyway. Just remind me. Don't remind me if I'm wrong, and if it does shoot up into the atmosphere, just remind me if I'm right. All right. What else we got? So we got the one more at the moment. So RHP. What is it? Ripe. Small trader. It's traded twice today. 150. Let's see. Bit on the offer there, 15 grand. Then it was 1,500 bucks, or say 16 grand. So not a lot on the offer. It's a smallie, but you can see that trend is well and truly up. It's come down, pretty much turned on a dime on the weekly, and then it's heading back up. So the weekly trend is up. It's probably getting, obviously it's a bit extended, but nothing, I guess, to get too concerned about, because there's no real clear resistance in the way what I'm looking through here. If there is, there's probably a key one's right up to 160. So not too much to worry about on the weekly, in the form of resistance. But this trend is definitely up, and it's repeating this price action. It's actually got, you can see, we'll draw it up. So it's always good to look at what's happened in the past, the particulars of the stock or the way it trades or the intricacies of the stock. Not everything trades exactly the same, otherwise trading would be far too easy. But you can see it's popped up pretty quick, like it takes off and spends quite a while contracting, and it does, it washes out, spikes lower, rejects, washes out, but all that level was rejected essentially. And it started to lift again. Well, that's probably a bit different. It lifted up here. Not so much this. I don't like that whippy price action. It'd be a hard one to have a run a stop on this because you probably get whipped out a few times. Started to lift, and you got a similar type of price action here after it's lifted, contracting, rejecting lows, higher low, but you can see that same sort of setup here. That was it, horizontal support, and you get lower highs working into it, and then bang, up she goes. Not so much here. That's really, I don't know what that candle was from. It's happened a few times here and here. Yeah, but it's really rejecting. When it rejects quite hard in that on that day. But you can see that price action, lower highs into it, found a support base. That's getting reconfirmed here. Tested it here, reconfirmed here. Then after that, holds through this level. You could have bought it on the break up. You know where your risk is, and up she goes up to $1.10. Similar type of price action through here. Quite clear. It's found a level. And that's an initial pullback. Well, not so much here, but pullback within the first month or so. The first third of that consolidation potentially, well, you got it right here. That pullback here was sort of within that first third or quarter even. Sideways here, again, similar type of price action. It's rejecting, and then you're starting to get it lift again. So whether, get rid of all that, whether this is a move up here and this is our base potentially to work from, would suggest there was some stage we're going to touch back down at that 105 before we start getting to that next little spurt higher. So I wouldn't say buy it off there, but I'd be looking for a higher low to start building. I don't particularly think it's happening just yet. I think if anything's to go by, the recent price action is similar, here, that pullback. We're in the midst of doing this type of price action. We take out this, or this low at 110, stall around that 105, retest that 105 or 106, and then chop around here and then start to lift. But you get those lower highs into that zone, looking for something like this, potentially something like this, some price action like that when it's starting to lift up again and buy it on the rise. Don't know if that's going to happen, but I personally wouldn't buy that if it just took out this level through here. I wouldn't be buying it through there. I don't think it's had enough price action yet to clean out a few of these traders. I hope that makes sense anyway, but we'll see how that goes. It's definitely longer term. You can see that's on the rise anyway. So, if there's sort of not so much trading it, but just investing in it, yeah, it's probably going to continue this rise. Sooner or later, it's going to be taking out these highs anyway at 120. The way I would trade it, I'd be looking for that entry. I'd just probably be waiting off on this one. I'd like to see that more contractive action over a longer period of time rather than just, so we're probably in that first third or half of a potential sideways actual corrective action and then start to buy it. We've, well, what we're doing here. As we get it, it's chopping around, starting to support, and then buy it off a higher low. Up she goes. So that's it in that one. And Paul, g'day, mate. Been quiet in the background there. What do we got? QUB. I'll flick it back to the weekly. So the weekly for me doesn't look too strong. Couple of factors you can see. Well, it's pretty clear. Babysitting. There's a little one asleep now. You're a typical male. Put him to sleep, come and do something. I like it. So we got that there. I got a high up here. It was overbought. Just trying to see. You can see this price. This is very choppy. You know, a big pullback. You can see going from overbought to oversold was this move down. Divergence here. But either way, that's pretty choppy. You can see a clear level up around 280. It's gone from overbought up here, pressed down. Yeah, that oversold is around those lows. It's pressed back up. You know, overbought, had a corrective action. Next time it was overbought, it touched on this level at 280. But what's happened then? It's come down, and that's broken that angle. So you've got this leg up, pull back, up, sort of touching on those highs. It's broken the anchor with this red candle, this big red candle just in here. Pull down, the sentiment's changed from going up to rolling over. It's a double top here, and that's a major lower high through here in comparison to the previous highs around 3, a touch under 3, 295. So that's a lower high. That's showing some longer term weakness potentially. It's pulled back, pushed up, sort of in that overbought territory, and then pretty much capitulated from there. But what we could be getting, and what I don't like necessarily, the market's edged higher. That longer term trend at the moment, you can see the MAs are down. We've gone above the MAs, but well and truly into overbought territory now. Now, I'd find that tough if I was going to buy it up at these levels for this longer term on the weekly to continue higher and continue up to 270. I'd find it more of a low probability entry. And that's probably purely from the weekly. And you can see when it gets a run on the downside, it goes for it. You know, there's no holds barred. It just particularly, especially these last, probably the start of the year, that big boom sell off. So if something bad happens in the US, for instance, this could be a lower high. Just clear that up a bit. This could be a lower high. Holding in here, we don't know. I mean, it's just popping up at the moment. But either way, if it is that move down, you can see this big washout capitulation down here. If that's putting the low, I still think it's too early for me to buy. I want to see that pullback to potentially retest 230. Something like this. Now there's a deeper correction than just buying it up here and expecting that to keep grinding higher. Because pretty much turn, it's a V-shaped recovery. Don't like trading those V-shaped recoveries. Anyway. Oh, perfect. I think that was you, Dav. Hope you saw that, Lauren. Just getting some messages through. Yes, that V-shaped recovery. I don't like particularly trade. I like to see that's not showing. That's more corrective action of this leg down for me. So ideally, if I wanted to buy it, I want to see it pop down, retest a level, an inside level, and then start to lift again. Okay, that's showing me that buyers are starting to jump back in again, ready to go on their way up. And then I'm happy to buy it, looking for it to press up to 180, 280, sorry. Just seems to be, sooner or later, it's going to run out of strength on that weekly, I would expect. I mean, it could go sideways up here, and that pressure just continues and it keeps going up. Good. But for me, like I said, low probability trade to buy it up here. And if you just flick it down to the daily, we'll see it's, it's getting extended on the daily too. So you've got two charts, potentially longer term, short term, and running out of buyers. That's the way I'd view this just at the moment. So I think it's due for potentially a correction. Then look for somewhere it's going to fall short, and then that uptrend resume again. I bet you it took you a while to figure out that sunglasses, Dav. You've been sitting there trying to figure out, how do I put that smiley face in? I'm laughing because I don't know how to do it either. Anyway, so that's probably call it a day there, guys. So that's it for me on that one there, but we'll see. You've been doing quite well lately, Paul, so just forget everything I said, but we'll see. We'll have a look at it later. All right, guys, thanks for joining me. We'll call it a day, and I'll be back in on Thursday, obviously. Same bat time, same bat channel at 12:30, and we'll go from there. We'll see what happens in the next couple of days. All right, guys, enjoy your next few days, and we'll speak to you again then. Bye.